Now, I don't know about you guys, but this is the kind of problem that would keep me up at night when I was going through my managerial accounting classes in college. So much information to choose from, so many different ways to use it, and the frustration of realizing that the question sounds much simpler than the answer. The question in this case is we're trying to figure out the cost of goods sold. Or more to the point, we're dealing with the budget. So we're trying to budget our cost of goods sold. Now, if you look on your screen, we're going to start with some basic facts. We're going to set aside some made up information, right? It doesn't come from anywhere, but to establish a fact pattern for us to solve the problem. And our focus here is on June. We're trying to determine COGS for June. Let's look at what we have, and I'll highlight as we go. First off, we have some information about the projected sales. We have it by quarter, but you'll notice that sales are even per month, which means, for example, in quarter one, even though we have 45,000 units, since that's 3 months, we can assume they're selling 15,000 units each month, and so forth. And it looks like we expect the price to vary a little bit between $24 and $25. All right, second, we have a bunch of information about inventory. We have both raw material inventory, both in its units, which in this case are pounds of raw material, both what we're starting the month of June at and what we would like to end the month of June at, as well as its corresponding cost, its dollar value. We have the same information for finished goods, in this case units being units, actual produced finished goods, once again with beginning and desired ending, as well as the dollar value. And then one of my favorites from any exam is the other information. How nice and generic. So they tell us here that first off, to make a new unit, a new item of finished goods, you need 3 pounds of raw materials. It costs $7 for each pound of raw materials. So that's my direct materials cost. Then I have my direct labor. Well, it says it takes a half an hour of direct labor to make each unit, and we pay our workers $18 an hour. Then we have our overhead, which has a both variable and fixed component. We have a $3.50 per direct labor hour, so we know that direct labor and variable overhead are going to be linked. And then we have fixed overhead of $125,000 as well. Now, as we pan back, on the left, there's our fact pattern, our introductory facts. And on the right, here's what we have to build. Now, I recognize, at first blush, you go, good heavens, really? You need this much? What I want to convey to you is that a lot of these problems are really a matter of just methodically using the data you have and logically connecting from one piece of the process to the other. So what I want to start with is let's build an understanding of the flow of information. One of the most important pieces of budgeting to understand is it's like dominoes. One budget, it has to be done first to knock into the second budget, and the second budget to the third, and so forth. And if you don't do them in the right order, you're not going to be able to solve the problem. Well, in this case, here's the logic. So we're going to go from top to bottom. First off, you have to know what your proposed sales are going to be. Because unless you know what you're going to sell, you don't have any idea what you need to produce, right? You need to make sure you have enough production to have enough inventory to be able to sell everything you think you're going to sell. Now, what affects production? Well, in order to be able to produce what you want to produce, you need to have enough direct materials to meet those production needs, you need enough direct labor hours, and you need to cover your overhead. And from the fact pattern we just went through, we know we have 4 elements, right? We have direct material cost, direct labor cost, we have a variable piece of overhead for factory overhead, and we have a fixed piece. Now, if you put all of those together, you get costs of goods manufactured. Right? That's the summation of all of those things. Once I know cost of goods manufactured, I can plug that into a very basic inventory formula. Now, if this wasn't a manufacturer, you'd see the formula a little bit differently. It would be beginning inventory plus purchases minus ending inventory is your cost of goods sold. Well, in this case, we're swapping out purchases for cost of goods manufactured. So the red arrows give you a sense of how the information is going to flow. What we have to do now is actually plug in the relevant data. So let's take a look at that. So in the same way that we just went through the general process, and I've zoomed in a little bit here to make it a little easier for you guys to see, we're going to walk through it exactly the same way, except this time we're actually going to start plugging in relevant data. And it really is an exercise. I go, okay, great. I kind of know how the pieces fit together. Now the plugging starts. It's, well, what data do I need to plug into this big model to make it work? Well, let's start with sales. How much do we expect to sell for June? Well, the only data we have is they tell us how much they expect to sell in the second quarter. So I'm going to set up my formula to say, well, quarter two budgeted sales is $123,000 units. Since we know it's even, we can assume that it's that number divided by 3. So that's my budgeted sales in units. So I'm going to go ahead and just bring that number over to the shaded box. So the shaded box is what you can take from those is this is kind of the bottom line for each piece, right? So my bottom line for sales is I need or I desire to sell 41,000 units. Great. Now, the next question that follows is, okay, that's wonderful. How much am I going to need to produce? Well, first off, what are my budgeted sales, right? That's what's going to determine it. So I got to start with 41,000. Now, logically, I go and say, well, whatever I started the month with in my inventory is going to be used to make those sales happen. And I'm going to want to have a certain amount of inventory left over at the end of the period, and that's going to help me figure out my production. So let's fill in those missing pieces. Next, we say, well, I know I need 41,000 units to sell. I also want to have, and if we look over here, we can see we want to have 9,600 units in my ending inventory. So what that means is, total, I need 50,600 units that would be available to sell. Now, the good news is I'm not entering this month with 0. It tells me I start the month with 12,300. So my production, therefore, and what I'll do just to make this a little easier is I'm going to make that a negative number. And then all I have to do is take the sum. So according to this, I need to produce 38,300 units in order to meet my expected demand of 41,000 units to sell and leave myself with an ending inventory of 9,600 units. So now that we know our production, we can start to use that to figure out what our cost elements are going to be. So we're going to start from the left, which is direct materials. It's the most complicated because we have to consider how many units we need determines how much raw material we need, determines how much that's going to cost. So here's the pieces. First off, how many are we trying to produce? Well, according to our production budget, we need 38,300 units, but that's produced finished goods. All right, if that's what I need to produce in finished goods, how many pounds of raw material do I need? Well, it tells me over here that I need 3 pounds of raw material for each finished good. So I'll just multiply that by 3. It gives me 114,900 pounds of necessary direct materials. Now, just like our production budget, we now have to say, well, if that's how much I need for production, which is kind of like how much I need to sell, I also want to make sure I have enough for that and however much I want in my ending raw material inventory. Well, they tell us over here that's 28,800 pounds of raw materials. Once again, the good news is we're not coming into this with 0. We started the month with 36,900 pounds of raw materials. So just like the production budget, same way, if we take the sum, we determine, okay, to produce 38,300 units of finished goods, I need to purchase 106,800 pounds of raw materials. That's great, but we're not trying to figure out units, we're trying to figure out dollars. So the next step is to say, okay, if I have to go out in the market and buy 106,800 pounds of raw materials, what's that going to cost me? Well, it tells me it costs me $7 a pound, which means that my total cost of raw materials would be $747,600. We have one more inventory calculation to make. If I start the period with $258,300 of raw materials and I produce $747,600 more, or I should say purchase that much, I can add those together. That's just over $1 million in raw materials available for production. If at the end of the period I desire to have 201,600 left, the sum of those items is $804,300. Notice it's the exact same formula. Again, it's how much do I need plus how much do I want to have left at the end minus how much did I start with. The last two times we did that, we were talking in units, but it still works the exact same way for dollars. So we have our first piece. Cost of direct materials will be $804,300. Now the good news is the other pieces aren't that complicated. Let's talk about direct labor. Start the same way. We need 38,300 units to be produced. How much direct labor does that require? Well, according to our other information, it takes a half hour of labor to make a unit. So if I multiply here, I figure out, well, I need 19,150 hours of direct labor. The good news is that unlike direct materials, I can't accumulate an inventory of labor. Whatever I need to produce, that's what it's going to cost me. Well, that's 19,150 hours, and according to the other information, I pay my workers $18 an hour. So my direct labor is the product of those two, $344,700. And I'll just drop that down into our cost of goods manufactured. The next one is factory overhead, but they're getting easier. You probably can guess that from the number of lines we have. But what's our factory overhead? Well, this one is even easier because they tell us that variable overhead is driven by direct labor hours. So all I need to know is, well, how many hours of direct labor are we going to have? Well, we've already figured that out, 19,150. The problem tells us that for every hour of direct labor, we're going to incur $3.50 of variable overhead. So all I have to do, multiply those two together, and I get 67,025. I'll go ahead and bring that down here. Now the last piece is the easiest piece. Fixed overhead. It's fixed, so it doesn't move. It's what it is. And according to the problem, it's exactly $125,000. So I'll carry that down here. So we're almost there, but there's a key distinction here. This problem didn't ask for cost of goods manufactured. It wants to know cost of goods sold. So let's figure this out. First off, we now have all four pieces of cost of goods manufactured: direct materials, direct labor, variable overhead, and fixed overhead. Comes out to $1,341,025. Well, one more time, we're going to use that same basic formula to say, well, if that's how much it costs in manufactured goods, meaning that's the cost of my finished goods inventory, I come back up here. My beginning inventory of finished goods was $430,500, and I expect to have $336,000 at month end. And again, I'll make that a negative number, which means if my beginning inventory plus my quote-unquote purchases, which in this case is what I manufacture, minus my ending inventory, that's my cost of goods sold. Admittedly, not a round figure, but it's $1,435,525. So as we show the picture one more time, key things I want you to take away from this. First, more than understanding the number crunching, it's critically important you understand how the process made sense. We needed sales. Sales allowed us to figure out what we needed to produce. What we needed to produce told us how much direct material we needed, and therefore its cost, how much direct labor we needed and its cost, and then the related variable and fixed overheads. Put those together, we knew how much we would spend, quote unquote, to manufacture our needed goods, and knowing that allowed us to figure out what our budgeted cost of goods sold would be. Second, I hope you see that ultimately, do we use every single piece of information? Almost. The only ones we didn't use that were truly superfluous were the other sales data at the top left. We don't really care about other months or other quarters. We're only focusing here on June. But a word of warning. On the exam, always double check what the dates are that they're asking about and what months you have information for. You can probably guess that this would get a lot more confusing if they were asking about June, but they gave you inventory information for June and July, and you had to make sure you were always plucking the right information. But hopefully this will help you understand the budget process. I hope you can also see how the examiners not only could look at this from almost a simulation point of view as a big problem, but it wouldn't be hard to create a multiple choice question for any little piece of this information, right? Can you imagine a multiple choice that's based off just the piece calculating sales and production? Could you see a multiple choice just calculating direct materials, both units and or dollars? Yes. So this kind of question is useful not only to understand at a high level and see it from a problem level, but also to understand, yeah, they could ask me a lot of specific multiple choice questions about elements of this process as well. So with that, I wish you luck and continued success as you work through this B4 part of the course.